This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. We've kind of seen a role reversal with the grains in the livestock markets. Live cattle had been grinding higher, making contract highs after contract highs the past couple of sessions, but seeing around a profit taking here today. A lot of that premium that came into the market was on the back of expectations of higher cash with weather concerns affecting the pen conditions. And I think a large part of that was priced into the market. Remember, if everyone's talking about it, the market already knows about it, so it's not new news. We failed to find additional momentum early today, and that led to that profit taking. Now, I still think the bulls have a firm grasp on this market, but they're going to want to maintain support 125.50 down to 125.25. If they can hold that on a closing basis to wrap up the week, they remain in control. A break and close below there might open the door towards 142 or 124, which represents the 50-day moving average. Now, as far as the feeder cattle are concerned, obviously kind of rolling over a little bit harder on the back of the surge in grain prices today. We've been trading sideways for the better part of the last 2 weeks, about 144.50, which represents the 50% retracement or the middle of the range between the contract lows and the contract highs. We weren't able to get any gas or momentum to the upside, so again, you're seeing some pressure come in with the help of grains and now pressing towards the recent low end of the range. We would not be surprised to see this market continue lower, 140 to 141, which is really the bottom end of the range going back into last year's trade. If that breaks, I'd say look out. So for right here, right now, not a whole lot to do. If we can hold 140 to 141, potentially step in on the buy side there. Now, wrapping things up with the lean hog market. Lean hogs really rolled over hard yesterday, testing the limit down early on in the session, but kind of rebounding and stabilizing. There is a gap going back to August in that April contract. 63.27.5 to 63.80 is kind of the pocket we're looking at. If we can hold here, I think the market can find some legs. As far as the RSI goes, or the relative strength index goes, we are near oversold levels, the most oversold levels we have seen since the contract lows back in July. So again, from a risk reward perspective, I think there's an opportunity down here, but you're going to want to tread lightly as this has been an extremely volatile market. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.